Hey, hi Ayush, hi Ketaki, can you hear me?
Yes, we can. Thank you, Hardeep, for joining. Just give me 2 minutes.
Sure, sure, no worries. No.
Hello, host. I think there is a issue. One panelist has joined, but her name is not there in the list. Can you please check? It's Shalini Fingari. We'll just start in a minute. Hi, Dwara. Hi, Benny. Sorry. Hi, Benny. How are you?
Very well, Ayush. Thanks. Can I also get a quick sound check? I'm coming through clearly.
Yeah. Yeah. Admin, please give us video rights as well. Admin, please also make Miss Shalini panelist. She has joined. Hi, Shalini. Hope you can are able to speak. You're
Hi,
audible.
Ayush. Thank you. Sorry for this delay because of some technical glitch to everyone.
No worries, Shalini. We'll just start. Admin, please give us the video rights so that we can switch on our video.
Yeah, hi Ayush. I have given the video rights already.
Okay, okay.
Yeah, you may please check again.
If where is the option to switch on the video?
Yeah,
Yes, there is.
there is. You may please check again.
Okay.
Yeah.
Able to.
You just need to switch
Okay.
on your cameras.
Yeah. I think I have not been given the right. Can you please check again?
Ayush, you are a panelist the way others have been able to.
Okay, okay. So maybe we can start and I'll see in between. So in the interest of time, I'll start. Hello everyone. Welcome to the session on day two of the second edition of India Internet Governance Forum. The session is on future of digital lending in India, next steps to ease the access to credit. Access to credit has been one of the major issues for the MSMEs, lack of working capital and accessing loans from traditional sources have proven difficult for them. Over the course of last few years, and especially during the pandemic, digital lending has picked up immense space in the sector, and the firms have started to capitalize on the gaps created by the traditional lending firms. They are reassessing the way credit risk was looked at. New age digital lending fintech companies have focused on reducing paperwork, turnaround time, and overall interest rates. In India alone, the industry is predicted to grow from $270 billion in 2022 to 1.3 trillion market opportunity in 2030 with a CAGR of 22%. Keeping this in mind, I think there is an immense potential for the digital lending sector to ease the standard of living and access to credit. However, the increasing penetration and easier access to credit also comes with its own sets of challenges. RBI has been working actively to regulate this industry and first set up a working group and then came out with the guidelines on digital lending recently. Therefore, given the prospects, it becomes important to discuss the way forward for this industry and what could be done to further its growth and ensure accountability without disrupting the market and innovation. We are joined by our esteemed panelists who will discuss these issues at length. We have with us Ms. Ketki Gaur Mehta, who is a partner at Cyril Amarchand Mangal Das, one of India's leading law firms. Ketki advises on M&A, private equity, lending, and financing transactions and other general corporate matters. We also have Ms. Beni Chugh. She's a research manager for Future of Finance initiative at Dwara Research. Her work focuses on identifying systemic stability and consumer protection concerns in digital finance. We also have Ms. Shalini Shingari. She is a vice president digital lending at Pine Labs, an Indian fintech unicorn. She is a seasoned fintech leader with 20 plus years of experience in the digital domain. She has expertise in setting up new business lines and scale up, and also experience in running both consumer and merchant lending business with a sharp focus on data-led customers, customer acquisition, and monetization framework through digital channels. Speaking of unicorns, we also have Mr. Hardeep Singh. He is a lead for legal and public policy at CRED. With more than 10 years of experience, he has been an independent practitioner as well as served as the legal counsel for companies. Thank you for all the panelists for joining the session. So I'll just like
Thanks,
to set the
Ayush.
outline. Thank you. So just like to set the outline of the session as well. We'll start with the opening remarks and some of the questions that I have prepared for each of the speaker, and you can answer those in 5 to 7 minutes each. After that, we'll also take the questions from the attendees. I would request all the attendees to post their questions in the chat box and we'll take it up from there. I want to make this as much interactive as I can, so I encourage you to post your questions. So I would now like to kickstart the conversation with Ketki. Ketki, I wanted to ask you about your assessment on the current regulatory landscape for digital lending in India in light of the recent RBI guidelines on what impact and what do you think is the how do you think the regulatory landscape is now shaping for the digital lending businesses? And I also like to ask you about how these guidelines are going to impact the Indian startups and how do you think the approach should be to regulate the sector? Over to you.
Sure. Thanks, Ashish. And thanks for the invitation with so many of the esteemed panelists. So in terms of the current regulatory landscape, it's so traditionally lending started with even the money lenders, and it was pretty chaotic and disorganized. RBI tried to put it in place with allowing only the regulated entities to do the lending. So the money lenders kind of got regulated by the state money lending acts. And then there were the banks and the NBFCs. With digital lending coming in place and the neobanks coming up, it kind of became more accessible to the larger public in India to access credit through various mechanisms. While some of these continue to remain unregulated. In some cases, they were just enhanced versions of regulated entities tying up with a few fintechs and tech fins in order to provide lending solutions to people at large, to reach out to people who the regulated entities would not ordinarily be able to reach out to. I think somewhere in the process, the fintechs and tech fins kind of, uh, you know, started getting more control and coming up with more, I would say, refined structures, which kind of did not gel well with the basic lending policy for RBI, considering the systemic risks for the country and economy, especially where, there would be the, uh, set of Indian diaspora where there is little ability to determine and calculate whether, taking on a lending product is or is not suitable for them, and where they probably don't even look at the necessary, I wouldn't say finer nitty-gritties, but let's say at least the necessary terms and conditions, which is where then, the working group was kind of set up, and the digital lending guidelines kind of churned out by the RBI. And prior to the digital lending guidelines, there was also a press release which set out what is being implemented on an immediate basis and what is expected to be laid out with some more thought process, and what needs to be thought through even further in terms of legislating in the future in order to organize this sector better. As far as how we read RBI thought process, we believe that they are open to innovations and they are open to startups coming up with as many innovative products and solutions as possible to reach out to the Indian diaspora as possible. But this got to be in a more streamlined manner where the regulated entities kind of take the ownership for the licensed activities being undertaken by them, and the fintechs and the tech fins providing the solutions to make it more innovative. We've seen some of the entities in the fintech digital lending world getting affected with the digital lending guidelines to an extent. But I think from where we see in the last 2 months, we've seen a lot of them come up with further innovations in terms of trying to see how they could comply with the digital lending guidelines of the RBI and yet reach out to the customers. So, I think it's only shaping up to make it a little more organized, I would say.
Right. Thank you, ma'am. Thank you for that. Was very insightful. I think, yeah, there is a scope of innovation and growth as well. But I think RBI is also actively working on some sort of. They have been able to realize that there is something going on in the fintech industry that needs to be regulated also. So I think in that sense, though there are some compliance burden, but I think there is a need to there is a recognition from the RBI as well now that okay, digital lending business exists and there is a innovation to it. I would now like to go to Beni, to you. Wanted to understand from the consumer standpoint, and what do you think? What opportunities and challenges do you see with the digital lending businesses, and what do you think are some of the best practices that can be incorporated in order to protect consumer interest?
Thanks, Ayush. I think Ketki kind of gave us an overall picture of what the ecosystem looks like from, let's say, a provider's point of view. Quickly coming to the customer side of story, what we understand from some industry reports, so right, this is not representative of the entire industry. There's like a bunch of fintechs who are kind of coming together, putting out data, and this is what we understand. What digital lending has obviously been able to do is cater to people who were not well served, if not completely excluded until recently, right? So the average kind of lender is a 30-year-old male with just about a graduation degree, equal probability of being a salaried versus a non-salaried person, right? And the average ticket size is somewhere around 10K. And the loan tenure is 3 months on an average. This is obviously just representative of about 12 to 13 people from the face kind of group who put out an industry report almost every month since May, right? And this is kind of going back to the data that they have shown. So this in itself is very telling. When I joined this industry only about four and a half, 5 years back, I was told that it was nearly impossible for a big bank to think of a loan of about 2,000 rupees simply because the cost of delivering that credit is way more than just the amount itself. And now here we have smaller loans with like minimum paperwork. Very recently, we understood that just the kind of cost of onboarding has gone down, obviously due to Aadhaar, but a lot of digitization in the process, right? So onboarding, which would typically cost around 400, just kind of verification, authentication, etc., is now down to 3 rupees thanks to UIDAI. So there's obviously a lot then that the customer has to benefit from as the infrastructure kind of converges, aligns, works smoothly. Ticket sizes that were nearly infeasible a couple of years ago are now possible. Turnaround times that were unheard of are now basically you check out of your e-commerce website and bang at the checkout counter you have, do you want to convert this into a loan, right? Like all of this are precisely unheard of even for some of us. So there's lots that the customer can gain from, especially when I kind of tie back to your larger point on the huge credit gap that's prevalent in the country for MSMEs, but also on the retail side. And then there's this gender aspect to the credit gap as well, right? So for women, the credit gap is much deeper, it's more entrenched. So I think that in that sense, there's definitely an opportunity for inclusion. There's definitely an opportunity for packaging and providing a product that the customer really wants, right? So if I do not want a 5,000 rupee loan, I should not be given one. All of that is great. And the instant nature of it then kind of, especially on the business side, even sometimes on the personal loan side, makes sure that we are not looking out for less kind of lucrative or more penalizing opportunities because there is a formal lender who is able to provide this to us. So that's obviously the opportunity and it cannot be overstated at any point. There are multiple challenges, right? And some of the opportunities actually, because the ecosystem is so new, because people are still responding to it, I think the opportunities themselves have like a double-edged sword. So for instance, the very instant nature, the very convenience with which people can get loan also means that a lot of consumption expenditure is happening. And consumption expenditure of itself is not a bad thing, right? As long as people are able to diversify, financially plan. But the whole impression that people have of, let's say, buy now, pay later, which is not even registering as a credit product in people's psyche, is problematic, right? And the industry has taken a maturity curve there. Mature players are realizing that there's a great deal of attention to be paid as to how you package a product. But in the meanwhile, there are lots of people who have actually gone ahead thinking of it as a payment product and then surprised to see their credit bureau reports being, showing too active loans, et cetera, et cetera. So there's that. The whole promise that it was supposed to be a zero cost loan has also now been unpacked, and we do see that there are costs associated with it, not just in terms of your credit bureau effect, but also real monetary costs when you kind of don't make payments on time, etc. So that's the second kind of challenge, that do people really understand that the product they're getting, because the convenience and the immediacy of it is so compelling that we forget to look underneath the tin. And I wouldn't necessarily place that burden onto the customer, right? Like, it's not like when I go to buy a car, I'm supposed to be a mechanical engineer and I'm supposed to look under the hood and to see that the car works well. It's actually that the government and the regulators out there have taken measures to make sure that only high quality cars get into the market. And that's pretty much the role that the RBI seem to be playing here, right? It's not so much to, and we can obviously say that how can this role be made, can be nuanced further, can be fine-tuned further. Is the industry, is this a sledgehammer approach versus is it, surgical enough? Of course, all of that, that's a sliding scale. We can see where we land. But that's the whole prerogative of RBI's entry, because there are so many new features that appear appealing to customer, but they do not, on the balance, look at everything else that comes with those features. So that's one challenge. The other challenge is, of course, something that all of us have been dealing with in our own ways, is the whole proliferation of kind of fly-by-night operators, a proliferation of exorbitant penalizing providers out there. And because the internet is so open and so wide, it is so hard to kind of regulate where those providers are coming up from, right? So all through the last 2 years, we've seen Chinese fake apps, as they are called. And I don't think that we need to get into the origins of those apps, but just because that's how they're popularly being referred to. The whole idea that these are apps that are kind of violating customer protection norms, are using unscrupulous measures, and they are popping up on, let's say, Play stores, on, let's say, the internet, and there is no effective way for anybody to intervene, intercept that customer journey, and make the customer take a step back and say, hey, how do you even know you're dealing with someone who is actually a genuine lender out there, right? So I think the whole idea of fake apps, fly-by-night operators, predatory lenders coming up, and us not being able to guard customers against it, is the second big challenge, as far as I can see. The third big challenge, and this is not necessarily something that the customer themselves face, it's quite at the back end, but obviously the repercussions are felt by the customer, is just the whole arrangement between fintechs and the lenders, right? So like Ketki told us, there are regulated entities, and those regulated entities then partner with fintechs, tech firms, to kind of make this digital journey possible for the customer. So we know that there was this arrangement of FLDGs, and we know that the RBI, we still don't know exactly where the regulator has landed. The industry has multiple interpretations of what's happening out there. But the whole idea that as long as we cannot create a regulated system in which fintechs, which may be unregulated, can partner safely with lenders, giving lenders the confidence of credit assessment techniques. And until that kind of conundrum is solved for, the customer will obviously keep bearing the brunt of it, which is often seen in, let's say, high costs of funding, or poor practices of recollection. So just to quote some numbers, processing fees from digital lenders can be anywhere between 1.2 and 5.5%. This is again from the smaller subset of providers who have been publishing their data. We don't know what it looks for the larger market. It could be perhaps higher, slightly lower, we don't know. And similarly, interest rates are in the band of 15% and 40%. So I think that there's a lot that, if we're able to sort at the back end, if we're able to sort how these entities kind of associate with each other contractually, then those benefits will flow to the customer as well, because there will be convergence in grievance redress, there will be kind of suppression of rates, there would be improvement of quality. So from my end, these are the three big challenges: the inability to distinguish between an authentic lender and kind of a disingenuous player, the inability to understand the product for what it is because the market is so compelling, and the inability of the system to yet kind of come up with a contractual arrangement that works for everyone, and the dividends of which can be realized by the customer.
Thank you, Benny, for such an elaborate response. I think also the fact that consumer protection also is the bedrock of all the business activities. I think that's there. Also, I think there is a need to work towards a more consumer awareness as well, in terms of telling them about what the pros and cons of the businesses of the lending activities are, because sometimes there are chances that they might not be able to pay back and they still take loans, and I think there are chances of miscommunication there. So thank you so much, Benny, for your inputs. I would like to go to Ms. Shalini, and I wanted to ask you, Shalini, about uh, access to credit or working capital has been the challenge for MSMEs for quite long. How do you think the digital lending businesses can help them get easy access to credit? Yeah.
So basically, till now, what was happening was, in absence of creditworthiness from this MSME segment, banks were shying away from offering any kind of credit to this segment. Whereas, digital lending is something which has enabled it for them. They are not going ahead with just what, how much amount they have and what kind of transactions they are doing, because sometimes these transactions are so unorganized for this segment, and it's even not digitalized. It's like cash transactions. So you do not have anything to actually evaluate the credit worthiness. So what has enabled digital lending has enabled for them is basically, taking other payment options which are being utilized, where we can, use those options to evaluate these SME segments, and we can figure out that, okay, basis these alternate data, which can help us define their credit worthiness and offer them credits, is something which I would like to say that digital lending has really helped this segment to, go ahead with credit requirements of them. Second, there are a lot of flexibility in terms of offering the products. So there is not just a single kind of a product, okay, we have X range of credit which is available and you have to go ahead with it. There are multiple options available, starting from small ticket to large ticket, and depending on merchant need or depending on this particular customer need, he can choose what kind of loan he or she can go ahead with. And also there are multiple repayment methods available. So some of the customers are comfortable with NACH, some of them are not. Okay, so they say that I earn so much every day and I'm okay to pay it in installment, which is like a daily installment. So please do not depend on me to make it as a lump sum money at the end of the month. I want it to go away on a daily basis, So there are various methods available for them to even repay, because for lenders also, it is not just that you give the credit, it has to come back also, right? So it is very important to have that trust and faith that, okay, whatever money I'm offering to the borrower, it is going to come back to me and is not going to hurt my business as well as a lender. So this is something I would say that digital lending has enabled on at least two fronts. Also, at the same time, anywhere, anytime access of digital, right? That is not just for the fintech segment, but for any industry we talk about. So these people, they do not have to move out from wherever they are, from their shops, their setups, their workshops, their manufacturing plants, etc. They don't have to step out. It is very easy. You sit there, you do whatever you want to do just with the help of mobile, and you can avail, at the same time, availability of multiple lenders in the domain. So what happens normally, if I go to one of the bank, to check about like, okay, this is my need right now, and I want to avail this particular loan. So it requires a lot of time investment to go and visit 2, 3, 4 banks or lenders. Whereas with the help of a marketplace, in digital lending world, they can just access what is the offerings from various lenders, and they can pick and choose. So I think it has really helped them by offering plethora of options, out of which they can choose whatever suits best to them, and then they can go ahead with it.
Right. Thank you, Shalini. I also wanted to ask the recent RBI guidelines that came up. Do you think that it ensures accountability on the businesses, or do you think it is an over compliance? Or
I am actually very much in favor of what RBI has come up with. It
right,
is in favor of customer. So
right,
what happens, as my friend has just mentioned, Benny, that there were Chinese apps, right? So every customer is not so financially educated. Financial inclusion is something which is yet to be, yet to be take that height in the Indian market. It hasn't yet reached there. There are so many people who do not even understand what it is all about. All they see is, oh, there is a digital app, they offer me loan, I am in the need of money, I am credit hungry, and I will just go ahead with it. They even do not get into the nitty-gritties of what is being offered to them, what is the processing fee, how much is the money they have to pay back, etc. Right? So RBI guidelines say it very clearly that please inform them beforehand what is the kind of a processing fee, what is the kind of interest they have to pay, what is the money which they are going to get at the end, after getting this loan. Also, there are guidelines which says that you cannot go ahead with customer consent during the digital journey.
Right.
So RBI guideline is very much in favor of customer, saving them from any kind of a fraud and helping them meet their credit needs at the same time.
Thank you, Shalini, for the inputs. Thank you so much. I would now like to go to Hardeep. Hardeep, you have listened to all the panelists, and I think my key question with you is with regard to the innovation and growth in this sector, in the digital lending landscape, and how do you think it is going to evolve in the coming time, and what impetus do you think the sector needs in terms of regulatory support, if there need be?
Thanks, Ayush, for the question. I think having heard, Beni, Shalini, and Ketiki, I think pretty much a lot of. I think what I'm going to say is going to be a sort of a summary of what the three of them have said. I think one thing is very clear. I don't envy the job of the regulator, right? It's a very, very difficult position to be in. They have to balance innovation and growth on the fintech sector versus what is a very, very important issue for the regulator and for the country, which is financial awareness and ensuring that users are not being taken for a ride. I think that balance is super, super critical for the RBI and all other financial regulators to crack. And I think what the regulator needs to do today is, in my understanding, is sort of go into a lot of nuances, right? I think the Chinese lending issue is super, super important. Colloquially, we're calling it Chinese lending, but basically any bad actor, right? When I say Chinese lending, it could be an Indian app which is doing bad, which is a bad actor on the financial stage, or anything else. But they have definitely been a huge problem. So I think nobody who's either a private, from the private sector or the public sector or any other sort of, research or universities or professors, everyone sort of agrees on this one point. But I think another thing which is sort of a footnote that gets lost in the whole debate on digital lending and these Chinese lending issue is that not all actors are bad actors, right? I think that is also very, very important to establish. I think what has sort of been missed in the narrative building over the last 10 to 12 months and the subsequent digital lending report and the guidelines and the consultations is that for some reason, all actors in the private sector have been considered to be working in their own interest and not for the interest of the country and not for the interest of the consumer, right? I think that approach sort of needs to be relooked at from the regulator's point of view. There are good actors and there are bad actors. Bad actors definitely need to be reeled in. There needs to be proper regulation. I think what Shalini said about the digital lending guidelines, I think it's very, very important, right? I think customer consent is super important. I think the other factors that they're talking about in the whole process of how to do the lending, what are for example, the key fact statement, which is now sort of a very, very essential cornerstone of the digital lending process. I think it's super important. But at the same time, it's also important to understand that there are a lot of digital lenders that are actually solving a very, very important problem which India faces today, which is a credit to GDP ratio, which does not compete with the most developed countries or the really fast developing countries of the world. In fact, an interesting thing that I was reading a few days back was that the digital lending sector has not only been helpful for the rural areas, so to say, or the semi-urban areas, right? Even the urban areas, the urban population of the country, which in theory has access to all banks and has to access to all other financial modes of lending, even they have seen or they saw a fall in the demand for loans and the giving disbursal of loans during 2020, 2021, right? And the same thing has been considered and has been mentioned in the digital lending report as well by the RBI, which basically said that the role of the NBFCs that they play is very, very important. It's something that the banks have not been able to do is give credit or satisfy the credit needs of a lot of urban and semi-urban people in the country, right? So I think digital lending is definitely super important for our country. We're looking at this not from a 5-year perspective, but from a 15, 20, 25-year perspective. our country is the leader in digital payments by far, right? And I think the next level of growth, and when we say what is the next stage in digital expansion for the country, right, or the digital footprint of this country, is I think just an end-to-end digital lending, digital collection structure. There definitely needs to be good regulation on this, on collections, on collection habits, on uh, proper disbursal, using the right bank accounts. And we as, I mean, I think at the private sector, we've had a bunch of discussions. I think we're all in the support of the regulator and better regulation. But a couple of things that are needed to really, give a a push to the innovation and growth. I think first thing, and I think this Benny also mentioned, is we need clarity, right? I think there is, with multiple regulations coming in, with multiple reports coming in, there are different interpretations in this in the industry, which is not necessarily good, right? Too many interpretations of the same regulation is never good, right? Because it would always lead to somebody interpreting it in the right or the wrong manner, and then therefore some other issues, right? So I think there needs to be FAQs, there need to be better this thing. For example, I mean, the digital lending guidelines that came out on the 2nd of September talked about the securitization framework, right? And sort of it became an alternate to the FLDG arrangement. And then yesterday, or I think day before, we are hearing some news that says that securitization no longer now applicable for loans under 12 months, right? So it, you know, it's hard to go to work every day and figure out that there is a new regulation or there is a new clarification and then having to rethink your products, right? So I think upfront clarity and consultation, which really brings the industry and the regulator on one footing, on one level, will be a huge push for the sector. I think the second thing is realizing that there are some good actors and working with those good actors to ensure that we collectively can push out the bad actors from the system, right? I think that is very, very important. No private player who's actually trying to do a good job wants to be bucketed, with a bad actor, in spite of all the good effort that we're putting into the game, right? We are trying to be transparent. We are trying to have, a good interest rates. We are trying to be competitive. We are trying to do all of that. And then suddenly one regulation puts us in the bucket with people who are pricing their loans at 50% APR, right? Of course, nobody, we don't want to do that. And I think the third thing that collectively the sector needs to work at, and I think also this was mentioned, was financial awareness. I think that is a key issue. Our digital payment sector, in spite of all of the growth that we've done, is sort of facing this issue with a lot of digital fraud, right? And I think the regulator and the MHA and the I4C and everybody is aware of that and working towards it. I think that same pattern will be replicated in digital lending, where with the growth of digital loans and digital collections, we will potentially see bad actors in terms of people trying to fraud the customer and all of that. I think we need to preempt some of those things, which I think the sector can definitely do, and need to start working on it before we reach a point where, there's a lot of heartburn and there's a lot of people who are actually impacted by that. So I think some clarity, some collective working with the private sector, some consultation, and working and aligning overall on aspects of financial empowerment and financial awareness. I think these 2-3 things will definitely help give the sector a boost and help digital lending sort of really solve a lot of these problems that we're facing right now.
Thank you, Ardit. That was very, very thoughtful and very insightful as well. I think a multi-stakeholder approach is also needed in terms of going ahead with this sector, because as we also saw in the tokenization, when tokenization was implemented, it was continuously extended for 2 years, and ultimately all the stakeholders who were not ready ultimately had to comply with, and there was some disruption even in the 2021 uh, payment changes. So there is a need for multi-stakeholder approach, I think, from the RBI. There's need to consult industry. They are prepared in terms of what has to come from the RBI as well, and also to talk to the consumer bodies as well, and consumers as well, as to what problems they are facing. So I think we have to balance both these interests. Uh, Now, I would like to take some questions that have been asked by the audience here. First is from Shruti. It says RBI came up with the idea of creating a whitelist for unregulated digital lending platforms. How will it pan out on, and will it hurt startups? Anyone who wants to take it up? Shalini, do you want to?
So I would say, it should not impact, actual or a healthy startup or a lender, who are actually complying to the regulations and who does not have any kind of a, bad intention to trap, customers. Like Hardeep very well said that, there are good actors and there are bad actors, right? So digital is kind of a, technology enablement, which is enabling the customer using technology and making them or providing them access of multiple services which is not available to them otherwise. And it is not just specific to fintech, it is applicable to any industry, right? So just by saying that digital lending and you can just go and anyone can go and launch any kind of a app, upload it on the app store, obviously it's going to hurt customer, will lead to more scams and frauds. So I do not see that if any lender who's like a good actor, and who is going to follow the RBI regulations is going to get impacted in negative sense from these regulations. I mean, everywhere there are regulations, every industry we have regulations. There's nothing wrong in regularizing the digital lending industry also. Even these, lenders, as Hardeep again said that, there are some technology innovations which are coming from the lenders who are making it easy for consumers to access the credit, right? So they are investing money to make it easy for customer, right? When we talk about, and even the best part is in India right now, government is supporting a lot. Fintech industry is the industry who has got highest investment in this year, right? So these are all factors which combine together and help, increase the growth of the industry. And I really do not see that, it is having any negative impact.
Thank you so much.
So it's a very conducive environment is all I can say.
Right, right. Nice. Another question is from Bhumika, who asked, should risk assessment standards be same for traditional lending institutions and digital lending? Ketki, Benny, do you want to come in here? And
Sure. So I think it's not about the risk assessment standards being same for traditional lending institutions and digital lending institutions, because at the end of it, the lending is still permitted to the same set of people. What the digital lending fintechs or tech fins are kind of enabling is to actually reach out to people who the lenders are not able to. So the lending is still happening at the same level. So the risk assessment needs to be done by those regulated entities, and there is already a framework for it.
right. Benny, do you want to come in here?
Yeah, two quick points, and I know we're kind of up to time. I completely agree with Ketki on that one, right? I mean, it's not like a separate set of entities are lending, and also that credit risk to the customer is the same, no matter who the lender is, right? It could be an NBFC, a bank, a fintech, whatever. And the great thing is that as far as I remember, the last time I checked the regulations, it's been a while. I'm kind of rusty there, but the last time I checked, there is no kind of micro prescription of what credit assessment should look like, right? And for good reason, because obviously it's not the regulator's business to prescribe and be prescriptive over, how banks conduct businesses. So there are some broad principles as to what credit risk assessment is, what it should look like, but there's no formula to it, which is great, which is obviously allowed for this innovation and which needs to continue remaining the same. The one thing that I would like to say is that at least in the last 2 years, what we've heard from our industry partners is that a lot of FLDG type arrangements were happening, because the argument from the bigger entity was that, hey, we do not understand this algorithm. So you kind of take a bigger cut of the first loss. And that's just a signal to, say that, hey, the algorithm works. And if the algorithm doesn't work, the person who actually has created the algorithm will put down greater money. Now, some of those can actually be also solved through technology, right? So if I can have like explainable algorithms, if I can have sandbox testing, if I can kind of do that in a technology setup, then the need for me to kind of satisfy or prove the robustness of my algorithm through money could come down. So there's different ways that the contracts could be designed amongst parties, but then credit assessment should not be anybody's concern at this point. However, one thing that's worth bearing in mind is as the industry matures, we understand our customers better, right? There is this one example that I say a lot, and that's because there isn't a lot of examples out there that we know of, right? But you definitely can't assess a woman through the same credit assessing model that you have for a young male, simply because the way women interact with their mobile phones, the way they use their mobile phones is quite different. It depends on the geography, it depends on the income class, it depends on the education class, it depends on the profession, right? So there's lots of kind of hyper segmentation, and to the extent that we as providers can be kind of careful in our credit assessment to say that we're not brushing everybody with the same brush. We're all okay, but credit assessment should not be a territory for regulation. I'll take one more minute with your permission. Just want to chime in on what Hardeep earlier said, in which what you also mentioned about multi-stakeholder approach, right? I think that not only do we need like industry and the RBI, which is obviously always a good idea, and I don't know why it takes so long for us to get there every cycle, but there's also need to kind of widen the group of stakeholders themselves, right? So there's a role for, let's say, Google Play Store to play in this. They can work with providers to weed out fraudulent apps, something that they did as an SOS when there was kind of an uptick in fraudulent apps, but there's a way to systematize it further. How can the App Store kind of, on an institutionalized basis do this more often, or provide intelligence to the provider or to the industry and vice versa more often, which also speaks to, I think, Shruti's point or someone else's point, that how do you actually go about enforcing, weeding out fraudulent apps. So there's a role for App Store providers. There's a role for what we now call as FinTalk, which is basically using all of social media for financial disinformation as well as information, right? So there's a need to kind of expand, as because the internet is so diverse and there are like different kind of centers of power in the internet, they all kind of need to come together to make sure that the customer is safeguarded. Only the regulated or only one provider will not be able to do this.
Right. Thank you so much, Beni, for that answer. Another question there is, I think, Hardeep and Shalini, you also mentioned about it, is that like in protecting the customers from the Chinese apps with regard to it, how can we build a capacity of law enforcement to help the customers if they are duped or harassed by unregulated NBFCs? So, Hardeep, do you want to take in? How can we build capacity of law enforcement agencies in assessing the discrimination cases?
So I think there's already a lot of work that is being done on this, right? I think I know for a fact that the organization that I come from and a bunch of other organizations that I have been speaking to over the last few months, we've been working with law enforcement agencies, explaining to them exactly. I think the one thing that I've seen is lacking is that unfortunately there are the bigger police forces, right, which is the Delhis and the Bombays and the metro cities and all of those, where I think the police is very well versed with their powers, the whole aspects of cybercrime and how to sort of deal with it. And we've worked with them in the past, and it's a fairly solved problem. But I think the problem is, and over the last few months I've seen, is in tier 3, 4, 5 cities, where unfortunately the police establishment also and the law enforcement also does not have the kind of resources that the tier 1, tier 2 cities have, and therefore they don't have the ability to track these these issues and how to sort of solve this. It is actually a problem not just for the law enforcement agencies, but also for the private sort of players who get involved or who get called into for some of these questions, etc., from time to time. So I think one thing is from the government side, I think there is some support needed on ensuring that there are enough resources provided to the smaller police forces to be able to tackle this. And at the same time, the private sector needs to share information proactively with police enforcement. And when I say information, it need not be information subsequent to a Section 91 request or a Section 41 request. I think it needs to be information proactively about these are the trends of frauds that we're seeing. These are the trends of, this is the way some new things are happening, and sharing that information proactively so that forces can continue to learn, unlearn, and become better at tracking and become better at solving these problems. Right? I think that is one key thing that needs to be done. I think the second is also that as we grow digitally and as we and as we sort of expand our digital footprint, there is a need to solve fraud in the digital economy in a digital manner, right? If you are trying to solve, see, the digital economy is the 2.0 version of the economy, right? Everything is happening online. Now, if you're trying to solve online frauds with solutions meant and fine-tuned for the physical world, it's not going to be possible. The scale of the digital world is, you can reach out to, for example, the Chat GPT thing that everybody is following, right? We had 1 million users for that product in 5 days. Now that is the scale of the digital world. So you cannot use uh, I'm forgetting the word, but solutions that are now extinct or not fit for the current world. So you need to work on a digital framework, and I think it's not that difficult. It just needs intent on the private sector. And there are also, private sector has too many different players, so there's multiple incentives for everyone. So I think we need to align together and as an industry and work with the law enforcement to have, for example, one single framework where all the frauds are reported, there is the information is put online, and that information should be accessible by multiple law enforcement agencies instantly. Because the thing with digital lending and the thing with digital frauds is you can take money in one app and thanks to interoperability, which is sort of being promoted by the RBI, you can transfer it to a wallet and then transfer it through a payment aggregator into another digital bank and transfer it to some other app and take out cash in some other part of the country in 15 minutes, right? Now, by the time somebody realizes and they send you a section 91 and I will get my team to respond and we will be able to get back, it'll be 3 days. Now there's a huge lag anyways there, right? And 3 days I'm saying is fairly quick on my side. So there's already a huge gap between when the amount was withdrawn and when we were able to respond to a request and when the law enforcement will be able to act. So I think we need to rethink the whole system. We need to train and rethink and come up with new solutions that are fit for 2022 and beyond, and then ensure that multiple stakeholders are aware and are trained and are capable of using this information online. And information should not be you should not have to request for information. It should just be available at a centralized repository. For example, the one great example here is bureau data, right? Like, it's a great central repository. If Hardeep Singh defaults on a loan today, it is reported, and if tomorrow I am taking a loan from another digital lending app, the NBFC will instantly be able to figure out that Hardeep defaulted on a loan 2 days ago. That's a great model of being able, and if that ways you could also figure out that Hardeep Singh is a fraudster and has been defrauding multiple people, or this app is not correct and has been defrauding multiple people, I think you could react to these things more in real time. So I think there needs to be some training, and then there needs to be some out of the box thinking to solve this problem. Yeah.
Excuse me, sorry to interrupt. Ayush, we are on a time constraint, so we'll have to
Sure.
wrap up the session.
I'll just wrap it. Okay.
Yeah.
Thank you so much.
Yeah.
Thank you, Hardeep, for your answer. I'll just wrap up the session. Apologies to the other to the people who have asked other questions. I will get back to you on those questions and personally, and make sure that you get the answer. Also, just to wrap up now the session, I'll just sum up what has been discussed here. I think we all agree that DL presents a huge opportunity for the Indian ecosystem, for Indian citizens to access the credit. But I think there is also need to protect the consumers as well. That's where the role of regulator, the role of RBI becomes very important. While they have come up with, they have taken steps to regulate the industry. There is also a need for greater clarity. There is also a need for greater multi-stakeholder approach, a widened multi-stakeholder approach where other stakeholders are also included to get their opinions as well. I think one of the problems that we highlighted as well was about the Chinese apps, about the bad actors who have ingrained in the system, and there is need for a hard steps that needs to be taken against them in order to protect the interest of Indian citizens as well. Also, the last thing that was really important that was said was about the building capacity of law enforcement agencies and a centralized system to come up with to address the issues of
Hi, Ayush.
frauds.
Sorry to
Uh,
interrupt.
yeah, I'll
Ayush,
just
we
wrap up.
have to wrap up.
Yeah. So
Yeah.
thank you all the panelists for joining the session. I hope you like the session and hope to see you in some other panel. Thank you so
Thank
much.
you. Thanks.
Thank you.
Thank you.
Thanks, everybody. Thank you.